India would be heavily impacted if the Middle East crisis and wars escalate and prolong for a longer time. You heard that right, and you might wonder why, and we shall explain you. Now, tensions in the Middle East have intensified with the escalating conflict between Iran and Israel raising concerns about a possible full-scale regional crisis. If the situation worsens, it could significantly affect global crude oil prices as Iran is a major oil producer. But besides this, it could also impact the Indian stock markets because everything is connected in this modern globalized world. Let's come to stocks first. With Indian stocks already trading at premium valuations, a prolonged conflict could prompt global investors to shift their focus away from India, which is also currently one of the world's top performing equity markets. Now, in such a scenario, investors might move their capital from riskier assets like Indian equities into safer havens like bonds or gold. Bonds in this case being US bonds. The Iran-Israel conflict has already spilled over to Dalal Street as we speak, with the benchmark indices already down by more than almost 2% since today morning. As far as equities are concerned, so far this year, the foreign portfolio investment inflows into Indian equities exceeded 1 lakh crore rupees, indicating global investors' confidence in the economy. Now, even though stock valuations remain relatively high, but experts warn that this trend could reverse as tensions in the Middle East region intensify, adversely affecting global trade dynamics and crude oil prices. You see, equity markets depend heavily on geopolitics as investors would want to rush to safer assets than making money. In some cases, they would want to rush to more return generating ones too. You remember how major equity markets reacted positively to the US Fed decision to cut interest rates in September, which was soon followed by highly anticipated measures from China. Now, these actions boosted investor confidence, prompting a surge in riskier assets such as equities. But the escalating tensions in the Middle East are beginning to cast a shadow over global investor sentiment and could influence the direction of major central banks' future policies. This would impact central banks of emerging economies like India, where RBI might want to continue the wait and watch approach as far as cutting interest rates are concerned. The challenges for the Indian stock market could rise significantly if the conflict escalates further. Let's talk about the second part of the equation, gold. Now, gold prices have reached multiple peaks this year, outperforming all other asset classes. World's safest asset also finds huge buying demand in India during the festive season, which is beginning. Now, if the war prolongs, the demand for gold globally will rise and this would impact the prices. As we speak, 78,300 per 10 gram of gold. That's the price. Now, the prices rose by 1500 rupees per 10 grams compared to Tuesday. Now, the combination of geopolitical risk and economic uncertainty may force central banks to rethink their strategies, potentially delaying further rate cuts. Now, going forward, gold prices might also rise, and this would be a special case for India because India is one of the largest importers of gold. This would again add to the current account deficit of the country. Now, on one hand, you have got Indian equities, and on the other hand, you have got gold. Both of these commodities will exert extra pressure on Indian economy in case the war in Middle East is prolonged. We shall keep you updated. Let's wait and watch. Stay tuned to LiveMint.